Good morning and welcome to the First Bank Credit webinar series. This is the second and the third of three webinars, and the title of today's session is Establishing and Repairing Credit. The credit webinar series is hosted by the First Bank and the Virgin Islands Small Business Development Center. My name is Mary Jo Williams, and I'll be your moderator for today's session. For those of you that are new, the VISBDC is a joint venture arrangement between the University of the Virgin Islands and the U.S. Small Business Administration. The VISBDC provides technical assistance for people that are looking to start a business, people who are looking to grow their businesses, and people who want to go out of business. So the VISBDC can provide assistance for businesses that fall anywhere along that continuum. One important note is we do not give any grants and we do not lend any money. We service the entire U.S. Virgin Islands. The St. Croix office is located at 6300 Estate Peters Rest, next to the Sprint T-Mobile office. And on St. Thomas, we're located on the second floor of Niski Center, upstairs of the Navy and the Marine recruiting offices. We are continuing to work remotely. So please visit our website, our Facebook page, or call us or email us for assistance. Today's session is being recorded on Zoom. Now, our presenter for today is Mr. Miguel Farrington, and I will turn the presentation over to him so he can give you his introduction and start with today's presentation, Establishing and Repairing Your Credit. Mr. Farrington?
Yes, good morning, everyone. And again, welcome to the credit webinar series entitled Establishing and Repairing Credit. My name is Miguel Farrington. I presently work for First Bank in the capacity of consumer loan manager. I'm basically responsible for the management of loan products to include auto, personal, and credit cards. Overall, my banking career spans about 35 years. So basically, I have a breadth of knowledge around credit and the establishing and the maintaining of good credit. And I'm going to share some of those points with you based on the presentation. So without further ado, we'll head right into the presentation. But before we begin, I want to just kind of give a brief synopsis of some of the points we're going to cover in the presentation. First, we're going to establish how to establish credit, or discuss how to establish credit, how to repair your credit, also the importance of credit and good credit at that, credit report access and the importance of credit report access. Then we'll talk about some lifestyle changes that can affect credit positively or negatively. We'll talk about some goals that one should have for themselves around maintaining good credit, and also speak a little bit about positive habits that will help to preserve your good credit, okay? And again, from my experience as a banker, one of the most frequently asked questions by my clients is, how can I establish credit when everybody seems to want to not take a chance with me? You know, how do I start? You know, that seems to be something that a lot of people don't know the answer to. And we are here to help to at least give you an idea of some of the things, some of the ways, and some of the products that will help them to do this, okay? So to begin, the definition of credit is a basic financial tool that you should know to use for your own benefit. It's not a quick fix for every financial circumstance, but can be very useful even in every valuable situation, okay? There are two types of credit. There is sales credit, which is usually done by means of a credit card. And then there's also cash credit, when someone basically uses their cash for the purposes of purchasing a product or goods. So what's the big deal about credit? Well, actually, credit is a privilege and a benefit in today's world, okay? It gives you purchasing power. It's very convenient. It allows you to purchase what you need right on the spot, okay? Even in emergency situations, credit is a resource that can be immediately tapped in more readily in some cases than cash. In today's world, your credit says who you are, and you basically are your credit. So as you become responsible for paying your own debts, credit cards, loans, rent, and other obligations, you're basically building your own credit history by means of this, okay? So basically, the better your credit history is and your resulting credit score, which is a number summarizing your credit record prepared by companies called credit bureaus, the better your chances of getting a loan and a good interest rate. So let's talk about some of the advantages around credit score, okay? A good credit score allows you, in a lot of instances, as just mentioned, to get the loan approved and also for you to get a good interest rate based on your score, okay? It also allows you to, be able to easily qualify for things like apartment rentals. It also gives you the ability to be solicited by other organizations and creditors for their products. They can go to the credit bureau, they can do a credit bureau poll and see who has good scores and send out solicitation letters for you to get credit cards and to get loans. So your credit score is very important for you to continue to maintain a good standing within the bureaus and within, of course, the credit world, okay? A strong credit score also can help you apply for when you're applying for a job, insurance coverage, and again, as I mentioned, an apartment rental, okay? But how can you build and maintain a good credit history? At this time, we're gonna leave Mary Jo, go ahead and take the poll.
Okay, folks, we are going to do several polls throughout today's webinar. And our first poll question is, are you in business? So if you can take the time and quickly answer the question, are you in business? It's a yes or no answer. And I will give you a few seconds to answer the question before we give the results. And all right, we'll give you another 5 seconds on the poll. Okay, we are closing the results of the poll right now and sharing the results. 80% of the people listening on today's webinar are not in business, and 20% are in business. Great. Okay, Mr. Miguel Farrington, the show is yours again.
All right. Okay, so let's get to the question. How do someone establish credit for the first time? Okay. One of the things that we can suggest, of course, you can open a checking account with a bank in order for you to start to begin a deposit relationship as well as a history as how you manage your checking account. But you can also apply for a credit card, which you can have an option of a secured credit card or a retail store credit card. JCPenney, Macy's, those type of retail establishments offer store cards for the purpose of someone beginning to start their credit, journey. And then you can also obtain a personal loan from a bank or a financial institution or a credit union. Now, to explain a little bit more about these particular products and how they're designed to help you establish credit, let's begin with a secured credit card or a secured personal loan, okay? These are basically facilities that are secured by your savings, okay? So you open a savings for a certain amount and you can be approved up to that amount in the form of a credit card or in the form of a loan. So to begin your credit journey, if you open your account with $2,500 and you go and apply for a loan or a credit card up to that amount, you would basically be afforded the ability to have that amount of credit power by means of the credit card, and also the loan will allow you to get that amount of money out for you to utilize. There's also the unsecured personal loan, okay? And with this option, you'd borrow a small amount because you basically don't want it to extend for too long, but you borrow a small amount, and this will help you to begin to build credit, okay? With the unsecured personal loan, it's good to note that if the reason for the loan is to establish credit, it's advised that you keep the loan open at least for 24 months or beyond for the purpose of establishing a good credit history and a good credit score. It would not benefit you to take out an unsecured personal loan and pay it off in 6 months. You're not really going to get the benefit of the credit or the credit score, which the creditors are looking for in evaluating you for future credit. So that's a footnote to keep in mind. Although, you'd like to be able to get a loan and pay it off quickly to show that you're responsible, the key in this particular instance to establish credit is longevity. So the longer it stays, the longer it builds a better score for you, okay? There's also the co-signer option. A family or friend can help you by means of this. If you're unable to qualify individually, they can come on board to sign for you. The payment history reported on both bureaus for you and the co-signers. But you will be responsible, of course, along with the co-signer for any missed payments or any negative credit that may arise from this. So it's also important that if you're going to go through the route of a co-signer, it's also important that you keep the credit history satisfactory for the benefit of both parties involved. Basically, as you begin your credits for the first time, you have to make a commitment to handle your credit wisely, okay? In regards to a checking account, you make sure you balance your checkbook regularly to avoid overdrafts. For your credit card, you may want to start by using small amounts and probably just keeping it current and not trying to go too close to your credit limit. And then, of course, with a loan, you want to borrow a small amount. And if you would like to pay toward the principal, you can. But again, as I mentioned before, paying off quickly for your first loan is not necessarily recommended. We would much rather see you leave it go for a longer period of time. Okay, so you have established credit, you're performing well, you're being current, and you're not displaying any delinquency or late payments. So what results from this is a credit report and a credit score. So we're going to talk a little bit about your credit report now that you've established credit. You are entitled to one free credit report every year. If you didn't know that, now you know. You are entitled to one free credit report every year. And this is in accordance with the FACT Act, which is the Fair and Accurate Credit Transaction Act. This allows consumers to receive one free credit report every 12 months at the website www.annualcreditreport.com. And at this website, you're able to receive the reports from the 3 bureaus, which are Experian, Equifax, and TransUnion. So even before you apply for any additional credit, if you want to see exactly how you're doing, what your score is, you can now go to this website and receive these 3 reports for your review, okay? During COVID-19, we know that accessing your credit report can be extremely important. So that all 3 agencies, Experian, Equifax, and TransUnion, have partnered together and now are offering free weekly credit reports. And this is going to happen through April 2021. So you could actually now look at it every week, instead of just one per year. And that'll be very helpful as trying to track and monitor your credit to make sure everything is accurate and everything on there is in reference to you and your activity, okay? As you look at your credit report, one of the key items that you need to be aware of as you're looking at it, of course, is the credit score. You also want to look at your outstanding balances, make sure they're accurate to what you know them to be. Delinquent payments on your accounts, if any. Again, you have to also verify if that is accurate, if it's there. Public record items, those include collections, liens, foreclosures. You want to make sure that none of that appears in your report if that's not accurate. And then errors. errors around social, around address, little things in the bureau that may not be accurate. You want to make sure you peruse it very well to make sure all the information in the credit report is accurate, because this is your representation to all the creditors that want to offer you credit. So you want to make sure everything on that is accurate. So what happens in your review of your credit and you see that your credit may have been damaged? Well, the first thing you should try to do, if you acknowledge that the damage was caused by you, is to try to repay your credit and reestablish it, okay? Again, the 3 credit bureaus will have the information there. You want to make sure that the information is accurate on all 3 bureaus. So once you determine that there is a problem with your credit and you can identify that it's appearing on all 3 bureaus, then you would need to start the process of trying to repair and reestablish your credit. So how do you do this? Well, first you have to develop a plan to address what's on the report, okay? The plan could include reaching out to the creditors to find out, first of all, how can you start to rectify the situation? Sometimes there are things that can be offered as far as payment plans, settlements, and of course you always have the option to pay it off completely, to get it off of there in totality, okay? If there are errors that you notice, you can also reach out by means of writing directly to the creditors and asking them to review or remove, okay? But once you do this, make sure you keep a record of what you have sent to them, whether it be an email. Make sure you keep a record, and also you need to follow up. It's not going to be enough to just send an email and say it's inaccurate, please remove, and don't follow up in 30 days to see if they have acted upon your request. You have to follow up to ensure that they have made the changes if necessary, and also that the changes have been done across all 3 bureaus, okay? Again, anything that you request should be corrected or removed within 30 days. And that's where the follow-up comes in. You got to follow up to make sure that you're doing that, okay? As mentioned before, if something is delinquent, it's easy to just pay it off or pay it up to date to try to get the credit reestablished, okay? We should also try to limit the use of credit. That basically means stay within your credit limits, especially on credit cards. Going over your credit limit is never a positive thing. So we have to try to maintain your limits based on what you know your limits are. Try not to exceed them. Hard inquiries, which mean that you're applying for credit very quickly at different institutions. Those called hard inquiries. Those pull negatively against your credit, especially if they are done, within a short period of time, okay? You also should be wise in using your credit. Make sure you use it when you need it, but not necessarily because it's there, okay? Because when credit gets out of hand, sometimes around revolving or credit cards, it can be very hard to rein it back in, depending on how far it gets out of hand. You also got to figure out what's the root problem of my credit, being having negative late payments, things that are not positive. What is the root problem? So you have to ask yourself some questions. Am I an impulsive buyer? Do I just buy because I have the limits available? Do you rationalize within yourself that, I only live once, so I'm going to live life to the fullest and expend the use of my credit, lavishly? Do you know the difference between something you need and something you want? Very important. Some things you may want, but not necessarily need, okay? And do you find it hard to say no to your friends, children, or family members? That can be another issue that can affect your credit negatively, where you continue to use your credit to kind of ensure that you satisfy, friends, family, or children. Then again, you start to see your credit starting to go, outside the bounds of your limits. So you gotta be very careful about things like that as you manage your credit. If these things may be the case or may not be the case, you still may have to look at some lifestyle changes as a premise for you to continue to maintain a good credit. and good credit history. You should establish and live up to a budget, knowing exactly what your expenses are and knowing exactly what your monthly obligations would be at a comfortable level for you, okay? You may decide that based on where you are credit-wise, that you're not gonna buy anything at this time on credit. You may just wanna just do cash purchases to maintain a certain level of credit and not to exceed. You may want to adjust spending habits, eating out, cut down on the dinners, just to ensure that you, again, stay within your limits on your credit cards. Recreational activities, you may have to curtail some of that as well, just to ensure you keep your credit cards in line. You also may consider getting a part-time job. If you find that your credits, your balances are getting out of hand, you're not keeping up with the monthly payments, you may want to look at maybe a part-time employment to help substantiate some of the income that you need to keep your credit flowing well. You also may want to contact your creditors to establish a detailed plan for paying off all your outstanding bills, which is considered more or less a payment plan. If you find that you can't manage all these accounts effectively monthly, they might develop a plan that will help you financially to handle all of your bills and keep them current. And establish common priorities within your household that each person can live up to. Figure out what you can live with and what you can live without, and basically set priorities around these. You always have to set goals and change your outlook, okay? Like we mentioned before, it may reach to a point where you may decide, I'm not buying anything on credit anymore. I'm not going to use my credit cards. I'm going to put them away for now. I'm going to pay on them, but I'm not going to utilize them anymore until I get things under control, okay? You might have to ask yourself, what is it that you ultimately want to accomplish in life? And how will credit help you to do that? We're talking long-term. Maybe eventually you want to buy a car. Eventually you want to buy a home. Eventually you want to start a business. So you have to ask yourself these questions as you start to build your credit. What eventually do I want to do? What do I want to accomplish? And you want to make sure your credit stays in line to accomplish that. If it goes negative, then some of your accomplishments will be out of reach, okay? Where would I like to be in a year, even 5 years from now, from a credit perspective? What type of credit score would I like to have in 5 years from now? The ultimate goal for everyone is to probably get a 700 to 800 score. So this is something you should try to strive to and ask yourself the question, where would I like to be? And how do I get there a year to 5 years from now? Put these goals in writing, put them in a place where you can see them every day. Okay, so you strive toward them. Look at ways to reduce credit costs. Look at ways you can start to, even consolidate certain things. You just put everything into one payment instead of 6 and 7 payments, okay? Pay back your loans quickly. Make sure there are no prepayment penalties. This, of course, is when you've already established credit and you have loans and you want to pay them off quickly, so to ensure that you kind of could free up some liquidity and make sure, of course, that whatever loans that you're going to repay quickly, the institution doesn't have a prepayment penalty in regards to paying it off early. Make as large a down payment as possible. This could be in reference to a car. It can also be in reference to a home. Okay, these things help to minimize your credit exposure and makes it easier for you to continue to make your monthly payments. Always make payments on time to avoid late fees. Late fees transcend into extra monies you have to pay, but it also transcend into negative ratings on your credit and thus decreases your credit score, okay? Keep the number of credit cards to a minimum, okay? Annual fees can add up, but also interest charges can also add up. So you got to be very careful. You're going to get solicited based on your good credit for a lot of credit cards. You're going to go to the mailbox and you're going to see solicitations and welcoming letters from a lot of different credit institutions asking you to come and take advantage of their card. Try to keep your cards to a minimum, a controllable minimum, because again, you do have to pay the fees on these, and of course, if you utilize them, you have to pay the interest charges as well. So having this new outlook, you begin to analyze your credit habits. You might want to start using more personal checks versus credit cards to make sure you keep your credit, at a level that you can control. Periodically check how you're measuring up to your plans and your goals in life. See how close you are to them. And if you decide to use your credit, you should ask yourself these questions. Will the added payment fit into my budget? Will the item I purchase or items I purchase last longer than the payments? Will I want this item as much when I'm making the payments as I do right now? That's very common. And how much will using credit increase the total cost of the purchase? Okay, so again, these are things you need to ask before you start to utilize your credit in order for you to know exactly whether you want to or should based on the circumstance. The importance of good credit. Okay, a good credit history is essential for many things in life that may be possibly in the future for you, as I mentioned before. Owning your own home. That's a goal, ultimate goal of a lot of individuals, to eventually own your own home. Good credit is a key to getting there. Banks look heavily upon credit along with other things in regards to mortgages. So you keep in mind, as you're building your credit history, you're building to a level that eventually, if one day you want to purchase a home, you would have a credit score that would be acceptable and looked upon favorably by the credit institution. Furthering your education. This can be in the form of maybe student loans, things that are relevant to expenses around further education. Your credit score will help you to obtain them as well. Starting your own business, the same thing applies. If your aspirations to be an entrepreneur and own your own business, your credit score goes a long way with credit institutions looking to give you startup money for you to start your business, as well as maintaining a good interest rate for the facility that you take out. A lot of the interest rates are tied to credit score. So again, the better the credit score, the better the interest rate, the better the payment, and the less money you pay in interest. Always remember, using credit well will equal being financially responsible. And when you're financially responsible, it's money for you in the bank. That concludes our presentation. There'll be some question feelers, so Mary Jo can proceed. Thank you all for listening.
Okay, next poll question. Where are you located? To give First Bank an idea of where their listeners are. And our options are St. Croix, St. John, St. Thomas, Water Island, or other. And I will give you guys another 5 minutes to answer those questions. Come on, everybody. Hustle up, hustle up. I don't think Mr. Farrington will send you a credit solicitation letter if you answer where you're located. All right, we'll end the poll in 2 seconds. And right now I'm ending the poll. And the winner is St. Thomas, with 50% of our participants being on St. Thomas, 17% on St. John. Yay, St. John finally got in the runnings. And 33% are on St. Croix. Excellent. Stop sharing that result and do the next poll quickly. And the next poll question is, did you attend the previous webinar session? And that's a quick yes or no. And we won't hold it against you. It says it's launching, but it's not out there. Where is it? There. Did you attend the previous session? And we'll give you guys, this is an easy question. And besides, regardless of how you answer the questions, we won't give you a grade. This is not even a pass-fail situation. It's just helping us to gather information so that we can better prepare for future webinars. Okay, and I will end the polling now. And 60% of our audience did not attend the previous webinar session. Okay, so 40% of you did. Yay, thank you very much. And we'll stop sharing that poll. And I think we have one more question. And that's an important question. Well, actually, we have two more questions. Are you looking to start a business? And we'll give you another 5 seconds to answer that question. Okay. We will end the polling now. 100% of the people that answered that question are looking to start a business. And I have one last poll question. So you guys can put your questions for Mr. Farrington in the chat. And my last poll question is, do you plan to attend the session next week? And next week's webinar session is on the fundamentals of business credit, things that business owners or potential business owners need to know about credit. And the presenter for next week will be, I'll have to ask First Bank who the presenter will be. And we're going to end this poll right now. And 100% of the people plan to attend next week. Yay. So we're doing really well. All right. So our first question for you, Mr. Miguel Farrington. If I have a credit card and don't use it, will I lose it? It's a two-part question. Also, I was told that having a balance on a card that is not over 33% of the limit is a good habit. Is that so?
The answer to the first question is, if you have a card and you don't utilize it, however you continue to pay the annual fee, usually the creditor will allow you to maintain the card as long as you're paying the annual fee. So that's usually the situation with most creditors. I can't speak for 100%, but a lot of the creditors will allow you to keep it as long as you continue to pay the annual, renewal fee. In regards to the utilization of a credit card, I think you mentioned 33%.
Correct.
That is an acceptable range of usage in the world of review of credit. As long as you keep it within that range, I think anyone would recognize from a credit standpoint that you're responsibly using the limits assigned. It's when it starts to get in 60 and 70%, that's considered an area where it's, overutilized in a lot of instances in the review.
All right, excellent. Okay, I have a next question. How long do things stay on your credit report?
If it's negative, there was a perception that it stays for 7 years. In reality, it stays as long as the institution continues to report it to the credit bureau. A lot of times things do drop off based on the creditors, we may decide to stop reporting it and thus it will drop off. And in other instances, creditors may decide to continue to report it for periods of time to exceed, 7 years, all depends. So it's all up to the creditor as to when they would decide to stop reporting the negative information into the bureau.
Okay, next question. How can you safeguard your credit and identity when using online services, example, banking, shopping, and bill payment?
Well, usually in those, it's important that you keep most of your personal information, outside of these particular online, services, social security numbers, things like that are things that people look for as they try to steal your identity, addresses, things like that. So on a lot of these online services, as much as you can stay away from giving as much of your personal information as possible will help to safeguard you from being a victim of identity theft.
What about what they call two-step authentication? Do you know anything about that?
Yes, a lot of time they require that for the purpose of ensuring that, there's not any pre-filled information that somebody might get their hands on. A lot of times there's pre-filled passwords, pre-filled information that allow access to certain accounts. The dual authorization basically means the second time around, you have to manually put the information in instead of it being pre-filled. So it's a good safeguard against things like that.
Okay. Okay, next question. If I add my children, some minors as additional users, will this help their credit?
No, authorized users is someone who is added to an account. They get the benefit only as being an authorized user. They didn't qualify necessarily for the card. It will appear on their credit as an account that they're authorized user for. But a lot of times in the review of someone's credit, an institution would recognize that as an authorized credit and basically know that they still have to probably have this person qualify based on their own trade lines. The drawback is if you're authorized user and the credit is negative, it does negatively affect you as an authorized user. So it has kind of a dual rule as far as authorized. You get the benefit of using the facility or the card, but it's recognized that you're authorized user, it's not necessarily your facility.
Okay, now I'm sharing a link in the chat, and that is for First Bank in terms of security information. So you guys can check that if you have additional questions about the First Bank security. Now, next question. Explain what is meant by 1.75% rate and a 1.97 APR.
The difference between a rate and APR is the rate is what is quoted to you based on the facility. Okay, it's an upfront rate. A loan rate would be 6%. That's what we advertise as the rate for a loan, for example. When you do get the loan and you're ready to close the loan and you're sitting at the closing table to sign the documents, now your APR, is your annual percentage rate, is actually now will be the combination of any fees or anything that has been added to the loan that would affect that 6%, okay? So the APR, if there are fees, there are some loans that do not have any fees, no application fees, in regards to mortgage, there might be other fees around the closing that may be added. But in a situation where there is no fees, your interest rate and your APR will be the same. If there is a fee, you'll see that the APR now is going to be different because now you have to consider the fees in the calculation of your true annual percentage rate based on the fee being added in.
Okay, great. Now that link for First Bank gives you tips for online security.
Yes.
Okay, cool. Next question. Is no credit just as bad as bad credit?
No. No credit still allows you to get credit based on what we discussed. There are ways to establish credit if you have no credit. So it's not necessarily a negative per se, but bad credit is. Bad credit can prevent you from getting any facility from any institution if there's negative things in your credit, opposed to that if you are not engaged in credit as yet and you want to, you are looked upon favorably based on the different products that can be offered to you to get you started.
Excellent, thank you. Next question. How are cell phone accounts reflected on your credit?
Cell phone accounts are only reflected when it becomes negative. Unfortunately, there is no reporting by any cell phone company of how you pay month to month. However, if you do fall into a collection situation with a phone company, it will be on your credit and it will be negatively impacting your credit score. So they only come into play if there's a negative reporting to be had in regards to cell phone accounts.
Right. Question. Any suggestion as to how I can help someone establish credit that has just gotten out of high school but not in college?
In those instances, I would suggest probably a cash secured loan or a loan that may entail a co-applicant or co-signer to strengthen them. The cash secured loan, of course, is a lot easier. The funds are there, secured by the bank. That will allow them to be able to, start their credit journey a lot easier. The co-applicant situation is also available, but again, it entails a little bit more analysis of the individuals, around, income, stability, and things like that, opposed to the cash secured where the money's there. So it's pretty much cut and dry that the bank will see that the security is minimal and they will go ahead and extend the facility a lot easier.
All right. Do medical debt greatly affect your credit when someone dies? What debt can be written off?
In regards to medical debt, yes, medical debt is one of the most common collections we find in this region as far as collections. Of course, a lot of it is based on insurance situations, co-pays, so a lot of time we tell the clients to visit the medical institution to see if they can either do a payment plan or settlement to try to get it out, because it does negatively affect your credit. Even if you do have excellent installment credit, collection and medical credits can pull away from your score. And in reference to deceased, of course, if it's a situation where their bills around someone who's deceased, then it really wouldn't be relevant. If the bills are for someone in your household who has since deceased, then of course it's a matter of you having, again, a conversation with a medical institution to see how they can assist you in regards to getting the bill either forgiven or set up a convenient payment plan or settlement.
So, Mr. Farrington, if I signed as being responsible for the medical bills of the person, and that person passes away, I'm still on the hook for that bill. Is that correct?
My understanding is if you sign document that says that you are responsible and you allow them to give you the responsibility around that person's care and bills, yes, you will still be liable for those payments based on your acceptance of the responsibility.
And that's why it would be reported to the credit bureau if it goes delinquent.
That is correct, because you authorize them to hold you responsible, yes.
Okay. So if you, yeah, okay, so, all right. Okay, next question. What are the ranges for the credit scores?
I can speak to First Bank. Our range from 6 to qualify for a loan facility. However, we do have a specialized loan that allows you to score lower than 640, actually 590. The only thing with that particular loan product is that the amount that you can qualify for only goes up to 7,500. Our other loan facility previously mentioned allows you to go up to 25,000. So we have two categories of scoring based on the product we offer. Again, to repeat, 590 or better, up to $7,500. 640 or better, you can qualify up to $25,000.
Okay, so the lower your credit score, the higher the interest rate you pay?
That is correct.
So you want a high credit score?
Definitely. It would behoove you to do that, to have a better score. Save money.
Okay, next question. If I make a payment during the grace period for my mortgage, does that affect my credit score?
It wouldn't affect it negatively. It would be considered a payment made toward the loan that is in line with the due date. So I guess the answer will be, it would not have a negative effect. It will just have an effect that you made a payment. And in some cases, if a payment carries you, forward or prepays the loan, it'll give you the benefit of the prepayment, but it's not necessarily reflected in the credit bureau report as a payment made within the grace period that will give you any particular, positive reporting. No.
Great. Next question. Does First Bank give loan consolidations or consolidation loans?
Yes, we do. As I mentioned, we go up to $25,000 as our limit on our personal loans, which can be used for consolidations. And this will allow you to come in and actually provide us with all the accounts that you want to consolidate. And we'll go ahead and facilitate the processing of the loan to help you to consolidate those loans into one loan facility with us. And a lot of times you find with consolidation, it allows you to take 5 and 6 payments, put it into one payment, and allow you to save hundreds of dollars per month in monthly payments.
All right. Do we have any more questions from the audience? All right. Yeah. Okay. So the credits range, the range for the credit scores with First Bank, you go as low as 590 in terms of looking at extending credit to an individual. What's
right.
the
Sorry. Right.
Okay, what's the total range of credit scores? Like, what's the lowest credit score that's available from the credit reporting bureaus to the highest?
Well, I know it can range from 400 up to 800. That's the range to the credit bureaus, 400 to 800.
Okay, cool. All right, are there any more questions from the audience? Okay, well, I'm looking for the PowerPoint presentation to put in the link.
Mary Jo, I think there's one more question.
Oh, one more question. Does your age affect the ability to get a loan or to be a co-signer?
Actually, well, by VA law, you have to be 18 years of age to apply for credit. But your age at 18 does not in any way prohibit or hinder you from being able to qualify. In regards to a co-applicant, again, the age minimum is always 18 to be an applicant or co-applicant or co-signer. But then again, we don't look at age in any way to hinder or to prohibit anyone from qualifying for a loan facility once they meet the other criteria that we have imposed on the product.
Okay, wonderful. So for those of you that are still here, we have put in the chat the PowerPoint presentation, so you can go ahead and download that from today's session. And if there are no other questions, I'll ask Mr. Farrington to put up the last slide. And on behalf of the Virgin Islands Small Business Development Center and First Bank, I want to thank you all for attending today's session. We look forward to seeing you next week at the same time for the Webinar Tuesday, where we will have established